About to leave, already packing. Come with me, I'm not really asking. We'll get away to a place where we don't know. About to see the world in action, what we can be, life with no distractions. We'll get away, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free with me. Let's go, let's be free with Not looking back, eyes on the freeway, Bonnie and Clyde, a classic cliche. We're on the run, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free. Let's go, let's
Afternoon, everyone. It's Jim here at TutorDue. Welcome to our fourth live revision session where we take a look at a smorgasbord, a selection of topics from the Edexcel A-Level Business Advanced Information, a chance to revise a nice variety of topics ahead of maybe mocks coming up and obviously the real exams in May and June. 2 weeks tomorrow, we start our Edexcel A-Level Business Grade Booster workshops where we visit cinemas, maybe coming to a cinema near you. So we've got a couple of weeks left to crack on with these live sessions. And today I'm joined by Pete and Mike. Good afternoon.
Afternoon.
Good afternoon, Jim. Afternoon, Pete.
Pete, meet Mike. Mike, meet Pete. Great to see you. And as always, a huge thank you to Pete and Mike after yet another busy day of teaching. Spend some time helping us go through these topics. We've got a nice variety of activities, all based on advanced information topics, but not exam style questions. A nice way just to test knowledge and understanding. Maybe the odd calculation in there as well, I don't doubt. And Mike's nodding. That means there is a calculation or two coming up. And maybe even I think missing vowels is in there as well, isn't it? There's a shortage of vowels at the minute. So we've got some activities where we don't need them. So I think we're good to go. What do we think? Should we make a start? Anything else to say, Mike, Pete? Or should we crack on?
It's me to start, and it's missing vowels to begin with.
Yeah, it never is. Fantastic. Okay, have fun, everyone.
So we are going to start with missing vowels. And what we've done here is we've cunningly removed the vowels from these business terms. So some key terms minus the vowels. The name missing vowels kind of gives it away, doesn't it? Let's have a look at the first one. It's a great way to get started. I'm not going to try and pronounce these, but if you can use the chat window, please try and put your suggestion in there. So The vowels, the A's, the E's, the I's, the O's, the U's have been removed. And we've got a correct answer already. Thank you, Summer. You were first in with that. The answer we will reveal now is, of course, quantitative research. Quantitative research, research based on facts and figures. So quantitative research was our first one. We've got a few more of these. Nice way to get started here. The vowels have been removed. It's missing vowels time. What's this second one? What have we got here? Another two-word term. What could this one be? Lots of answers coming through in the chat window. And I think Lauren is first here, closely followed by Ben. Trading block, of course, trading block. Easier when the word starts with a consonant. But yeah, missing vowels here is trading block. Number 3 then for you. This is a 3-word term. 3-word term. I'm just looking in the chat window at some of the suggestions. 3-word term. Missing vowels. The vowels are gone. What is the term? Thank you, Alex. You're the first here with stock market flotation. When an organization floats, when it launches on the stock market, it's called stock market flotation. Well done, those of you that got that right. We've got 2 more. Number 4 is on the screen here. Another 2-word term. A lot of R's in this. Oh, Jawaria, very quick indeed. Not quite the correct one. And if I don't get the correct, if I don't pick out who's first, then please forgive me. Lots of answers coming through for this one. It is the current ratio of current assets to current liabilities, the current ratio. One more, our last missing vowels. These are always a favorite. Another 2-word term, perhaps slightly more challenging. Jim is the adjudicator here, and he said that Lauren was first on that previous one. So that's official now. That's locked in. What's this? This, I think Alex is first again. Internal recruitment. Recruitment from within the organization. Internal recruitment is our final of the missing vowels. Nice way to get started. Good little warm up. Get the brains in gear. Now let's look at some multiple choice questions. Multiple choice questions. Question 1, the focus of a business on a product's quality and performance as opposed to meeting customers' needs and wants is called, is it A, product development, B, product orientation, C, market orientation, or D, quality assurance? A, B, C, or D, answer in the chat window. And before I've even finished the question, we've got some answers through already. That shows the caliber of the people out there in taking part in the live session. If you're watching this on the replay, of course, you can't do that, but you can still play at home. Liam, I think you were the first with an answer here and a correct answer. B, of course, is the correct answer. Lots and lots of correct answers there. Product orientation, of course, is where the business focuses on products, quality and performance, as opposed to what customers want. Number 2 on the multiple choice. Remember, multiple choice questions, if you don't answer them, you will definitely get them wrong. So you must answer these multiple choice. It's the only time that the examiner will actually give you the correct answer. They'll give you the answer on the paper. You just have to choose which one it is. So which of the following statements is true? A is a favorable cost variance occurs when budgeted fixed costs are higher than actual costs. B is when money owed by a supplier is a payable. C, lower capacity utilization reduces unit costs. Or D, the formula to calculate the current ratio is current liabilities divided by current assets. I suspect we'll get a range of answers here. That seems to be reflected in the chat window. Read carefully here. Which of the following statements is true? I'm looking down the list. And we've got, there's a mixture of answers. Some of them are correct. Let's see the correct answer, Jim, please. It is A. A is correct. A favourable cost variance occurs when budgeted fixed costs, so when budgeted costs are higher than actual costs. In other words, actual costs are lower than you budgeted. That is a favourable cost variance. B, money owed by a supplier is a payable one. Money owed by a supplier, owed to a supplier. Okay, money owed to a supplier, but not by a supplier. Lower capacity utilization is likely to increase unit costs. And the formula to calculate the current ratio is the other way round. It's current assets divided by current liabilities. Good example there, just the importance of reading questions and reading them carefully. Next multiple choice for you. The process of smoothing out fluctuations in sales data to find the underlying trend is called what? Is it scatter graphs? Is it extrapolation? Is it moving averages? Or is it correlation? Scatter graphs, extrapolation, moving averages, or correlation? Again, a range of answers coming through here. I think that Lauren might be the first with a correct answer here. When we smooth out fluctuations in sales data to try to find the underlying trend, we use moving averages to do so. We use moving averages to do so, and then we can, when we've identified the trend, we can then look to extrapolate that. So moving averages is the correct answer to this multiple choice question. Well done if you got that right. If you didn't, hopefully you can see why not. Multiple choice question number 4. A limit on the amount of good that can be supplied to a market is called A, tariff, B, quota, C, export, or D, subsidy. Very quick answers coming through here. Limit on the amount of good that can be supplied to a market. Is it a tariff, a quota, an export, or a subsidy? And much more agreement on this one, I think. And the reason for that, of course, is that the correct answer is indeed B, as so many of you have identified. A quota is a limit on the amount that can be supplied to a market, either by volume or by value. Tariff is a tax on imported goods. Exports, of course, are sold into foreign markets, and a subsidy is money given to an organization to encourage them to increase production. Well done if you got that right. Last multiple choice, and then I'll hand over to Pete. What's the formula to calculate gearing? What is the formula to calculate gearing? Is it capital employed divided by current liabilities times 100? Is it capital employed divided by non-current liabilities times 100? Is it current liabilities divided by capital employed times 100? Or is it non-current liabilities divided by capital employed times 100? I can tell you it definitely involves capital employed, and it's definitely multiplied by 100. Do we know what the gearing ratio is? Seemingly, a lot of us are willing to give this a go, which is really important. And I think a lot of us are right. And just looking down the list here, I think Summer, you are the first one in with that. Non-current liabilities divided by capital employed times 100. That's the gearing ratio. Make sure that you know that non-current liabilities divided by capital employed times 100. That is the formula for the gearing ratio. Let me hand over to you, Pete, for a 10-second countdown.
Thank you very much, Mike. So, nice activity here. You're going to have 10 seconds to answer the questions that you're going to see on screen, and we'd like to pop your answers into the chat window. So, let's start the timer, please, Jim.
Liftoff will start in T-minus 10 seconds. 10,
So
9,
3 methods
8,
of investment
7,
appraisal.
6, 5, 4, 3, 2, 1. We have ignition.
Okay, thank you very much for those contributions. I think it was Amelia who was first in there. So payback, average rate of return, and net present value are the three investment appraisal methods from your specification. You obviously need to be able to define and explain each of those, but what is obviously key is carrying out the calculations. So thank you very much for those contributions to start off with. Let's move on to our next activity, which takes it that little bit step further, and we are going to ask you to calculate the average rate of return for an investment. So you can see we've got our initial investment shown in year 0 of £500,000, and then our net cash flows for years 1 through to 4 respectively. What you need to do is calculate the average rate of return for this proposed investment, and we'll be generous, we'll give you a minute. Start the countdown, please, Jim. Okay, 60 seconds isn't an awful lot of time at all, is it? Okay, so well done for having a go at that. Remember, we're looking for the average rate of return rather than the payback period. So payback tells us when the investment is going to be repaid, taking into account those net cash flows. So how long it's going to take the business to see a return from that investment in terms of years and months. So it was a percentage we were looking for here. Let's take a look at the correct answer. Don't worry if you didn't quite get there. There's an awful lot to do there in 60 seconds. So think of this as a process, and you need to have this outlined in your memories in terms of approaching these questions in an exam. So for me, the very first thing that I would do, I would calculate the total net cash flows. Okay, that takes us to £1.4 million. Step number 2 is to subtract the cost of our initial investment. Okay, so 1.4 subtract £500,000, subtract £500,000 gives us an average. So it doesn't give us an average return yet. That gives us our 900,000. Okay. After that, we then need to calculate our average return. Okay, so what's the average that's returned from this investment over the time period in question? And we'll take that 900,000 and we'll divide it by 4 years, because we've got 4 years that we're interested in. Now, to get the rate of return, i.e. the profitability of the investment, we are going to divide that 225,000 by our initial investment. That's shown in year 0, remember, that's our initial cash outflow of £500,000. And we want to express that as a percentage, so we are going to multiply that by 100, and our average rate of return is 45%. What you'll remember from your studies is, of course, that average rate of return focuses on profitability of the investment rather than how long it takes to pay the investment back, which is what the payback period is concerned with. So that 45% in theory means that it's 45 pence returned in every pound that is investment. Of course, we make a number of assumptions when we're carrying out our ARR. We assume that the costs and revenues are realized. Okay, so we assume that it does actually cost £500,000 and that those years 1 through to 4, those net cash flows are actually realized. You'll remember that you can critique your investment appraisal, and it might not be the case that those net cash flows are realized. It could be an unanticipated event that could affect the level of our cash inflows. So lots to do there in a minute. Don't worry, like I said before, if you didn't get that, it's one to always practice, and a minute isn't a lot of time. So well done for having a go. I'll now hand you back over to Mike.
Thanks, Pete. Just a bit of extra music there, extra value for money. But we're going to do an activity now called On Balance. And what I'd like to do, please, is try and give two advantages of entering a market with a high growth rate. So a market that is experiencing rapid growth. What are two benefits of that? Answers in the chat window, please, if you're watching live. So you can do them one by one. You can do them both together. Depends on how quickly you can type and how quickly you can think. But two advantages or two benefits of entering a rapidly growing market. Thanks, Liam. Nice to have your thoughts through, and others coming through as well. Yeah, recognizing some of the benefits. A few more seconds if you're still working. Some good answers coming through. Let's have a look and see what we put. So the first one there, potential for significant increases in revenues and profits. I'm seeing, looking down the chat window, and I can see lots and lots of people have specified one or both of those. So significant increases in revenues and profits, the potential to do so. The market's growing, and therefore potential for more sales, potential therefore for greater revenue, and all other things being equal, greater profit. The second one we've put is the opportunity to exploit economies of scale. The market is growing, therefore a business can increase output, and in doing so can realize benefits in terms of unit costs or average costs. So economies of scale is another possibility. There are other options as well. That list is by no means exhaustive, but two arguments there is as many as you would need. What about the opposite? Let's look at the other side of the argument. Let's look at drawbacks or disadvantages of entering a market with a high growth rate. What are the disadvantages? What are the potential drawbacks to a business of entering a rapidly growing market? Answer in the chat window again, and I can see some coming through already. What are the disadvantages of entering a rapidly growing market? Keep them coming. I'm reading them as they come in. Yeah, lots of us recognizing that there's going to be more competition. The market's going to be increasingly attractive to other firms, and therefore may become saturated. There may be more competition, maybe harder actually to increase market share and increase sales. Let's have a look at our suggestions then. Competition is definitely there. You're likely to face more intensive competition in rapidly growing markets because, as I said, they're going to be increasingly attractive to other firms. But to enter rapidly growing markets may require significant investment, maybe very costly. And I can see some people have hinted at that or specified that in their answers. And therefore, even though the market is rapidly growing, a business may incur losses initially. Certainly, they may incur losses, which may make it very difficult to continue trading, very difficult to compete with other firms. Really good answers in the chat window, very impressive. Thank you for your contributions. Please do keep them coming. I'm not sure what the next activity is, whether it's bingo, as I would call it, or Pete.
I would call it bingo as well, Mike. So you might want to draw yourself a 2x3 grid, or alternatively, just pop your answers into the chat window. So can you name all 6 elements of Pestle? Answers in the chat window, and then we'll wheel out the tutor to you bingo machine, and we'll see if we agree with you. So remember, Pestle is our tool, our framework for analysing changes in the external environment. I can't really say much more than that, otherwise I'm going to give the answer away. However, I would say that this considers things such as changing lifestyles, business policy, disruptive innovations are considered within this framework. So thank you very much, Lauren, Alex, Ben, coming thick and fast now. Well done. Okay, here we go. If we can crank it up, please, Jim. Let's wheel it out. So name all 6 elements of Pestle. Political. I think we've had quite a few people name that so far. So that's when we would look at things like competition policy, government spending and tax policies. Economic. So here, key things such as changing interest rates and what at the moment it's inflation that is a key economic variable that's affecting firms in every market. In particular, people like me and Mike as consumers, as we go and fill up our cars every day. I think I paid £1.60 a litre last night for my petrol. Very expensive. So economic, social factors when we're looking at changing lifestyles, tastes and preferences, population changes, all of these elements that are outside of a business's control that are going to affect how they respond with various strategies and strategic planning. Technological, mobile innovations, disruptive technologies, new ways of working and new ways of communicating with consumers will all fall into that category. Legal influences. Well, one of the big ones that you can make reference to or allude to in some of your analysis is the implications of our changing relationship with Europe, of course, over the last 4 years or so. But the minimum wage, employment laws, those are all various factors that could change and have an impact on how a business operates. Those are all legal factors. And therefore, there is one more which we've the majority of us have picked out in the chat, which is, of course, environmental issues, which again is hot on the government's agenda, isn't it? With in particular the banning of the sale of new petrol and diesel cars by 2030. So lots there, lots for you to think about moving forward as you practice assessments and on your way to the summer. Thank you for the contributions in the chat window. And now I'll hand you back to Mike for the connection spinner.
Thanks, Pete. I'm sure that was bingo, but you referred to it as bingo. So I was a little bit confused for a moment. We're going to do a connection spinner.
North. Yeah.
We're going to sorry, excuse me. We're going to do a connection spinner exercise. We're going to look for the connection between two particular items. We've got here in the middle of our connection spinner an increase in capacity utilization. So an increase in capacity utilization, and then around the outside of our connection spinner, we've got 6 different options. So we're going to spin the wheel and see where the needle stops, and we're going to look to make a connection between an increase in capacity utilization and that factor. Let's start the wheel running. Where will it stop? Okay, so it's stopped on motivation. So we're looking then to make a link between an increase in capacity utilization and motivation. Can you do that in a sentence or 2? You can put your answer in the chat window if you're with us live. If you're watching on replay, then you can have a go at this at home. An increase in capacity utilization and motivation. That's the link we're looking for. We've got a high caliber of answers so far this afternoon, and I've got high expectations for this. Answers coming through now. Doveshi decreases motivation as there'll be a need for things like overtime. Okay, that's an interesting point, because it may be forgiven for only thinking of the positives of this. An increase in capacity utilization might be seen as a positive, but from a worker's point of view, it may mean more work, may mean more overtime. Hannah, thank you for your response. Employees are more productive. There's an increase in capacity utilization due to the high levels of motivation. So we're linking it perhaps the other way around. Okay, why motivation can help to increase capacity utilization. Alex, thanks for yours. Linking capacity utilization, high levels of output from workers, which may increase motivation if they enjoy their jobs, or vice versa. And Ben, a comprehensive response as well. Increase in capacity utilization may result in workers becoming overstressed and overworked with potentially excess overtime. So similar point to the one that Daveshi made before, causing a fall in motivation and esteem needs. Let's have a look at our suggested answer here. So workers may actually feel more secure in their jobs. The organization, the business is experiencing increasing capacity utilization. They're producing more, a greater percentage of their capacity. So workers may feel more secure in their jobs, meaning their safety needs are met. Bit of Maslow there, which can increase motivation. Okay, we're looking to link these two things. Brilliant answers so far. Let's do another one of those. So we're still going to use capacity utilization, an increase in capacity utilization, same 6 factors around the outside. We'll spin the wheel again, please, Jim. Hopefully it won't stop on motivation again. Oh, and it hasn't. It stopped on price. So same sort of thing, looking to make a link between an organization increasing its capacity utilization and the impact that may have on price. Increasing capacity utilization, impact on price. Try and summarize, or try and get that in a sentence or two. Put it in the chat window if you can. Jim has the capacity to put some of these on the screen, so you may be able to see your answer, and others will be able to see it as well. So capacity utilization still increasing, and we're looking now to understand or try to work out the impact on price. Ben, again, thank you. Increased capacity utilization may result in an increase in productivity and a reduction in unit costs. Assuming cost plus price will fall. Nice reference to a pricing strategy there as well. And Alex, high capacity utilization decreases unit costs, which may allow them to sell their product at a lower price than competitors, or keep price the same and boost profit margins. Well recognized, Alex. And of course, scope for some evaluation later in the answer there, having made that point. So Lauren as well, price can be lowered to give them a competitive advantage over rivals as the unit costs may be reduced. Let's have a look at our suggestion on the screen then. An increase in capacity utilization will result in a fall in unit costs. We know that. Increase in capacity utilization will spread cost over fixed costs over a larger number of units, so unit costs will fall. A business may decide to reduce prices or keep them the same and enjoy higher profit margins. And that may lead on to a depends on factor perhaps later in the response, depending on the price elasticity of demand for that product. Some brilliant answers in the chat window, some really detailed ones. I haven't had time to read all of them out or draw attention to all of them. But thank you for your responses. And Pete, I think we've got time for another 60-second challenge.
We do, yeah. 60 seconds this time. Florist Gump, and this is a real business located down the road from me in Sunderland. It's a flower stall. The business only sells £5 bouquets of flowers, and the variable cost per bouquet is 2/5 of the selling price. The business's yearly fixed costs are £15,600. We're going to give you 60 seconds to calculate the weekly break-even point of Florist Gump. Very impressive stuff, folks. I think Jack was the first one to contribute an answer there. Well done. Thank you, Alex. Lauren, Hannah. Let's take a look at Deveshi. Sorry, and sorry if I mispronounced your name. So, again, and I've emphasized this with all of my students, you need to be able to recall the key formulae when you're approaching this question. And it's key that you can retrieve this. So clearly the contribution in the chat window have managed to do that so far. What's the thought process? Well, we need to know our break-even formula, and then we need to apply it. So start off by working out the variable cost per unit. You're told it's 2/5 the selling price, 2/5 the same as 40%. So we are going to find that first. That's £2. Then, of course, we need to find contribution per unit. £5 take away £2 gives us 3. Now we need to find the weekly fixed costs. When I tried this with some students earlier to test it out, that was a common misconception. They didn't find the weekly fixed costs. So always read the question carefully. It looks like we have here, so very quick and accurate work, as Jim said in the chat. So that's 300. Where do we get that from? 15,600 divided by 52 weeks of the year. Applying that to our break-even formula, which is of course fixed cost divided by contribution, i.e. selling price take away variable costs, it is 100 bouquets of flowers. So excellent stuff. Well done. I'll hand you back over to Mike for our final activity, which is a true or false quiz.
And a bit of bonus music as well. That's true, Pete. This is true or false. So if you're watching live, then you can join in the chat window simply by putting a T for true or F for false. First question is on the screen. Current ratio of 1.5 to 1 means that for every £1.50 of current liabilities, the business has current assets of £1. Is that true or is it false? T for true, F for false. You can type the whole word if you want to. You can add an explanation as well, as Daveshi's done. I think we have universal agreement here. We recognize this is false, and one or two have gone on to explain why that is. Current ratio of 1.5 to 1 means that for every £1.50 of current assets, the business has current liabilities of £1. It's the other way around. Current assets to current liabilities. Second question. The margin of safety is the difference between actual output and break-even output. Is that true or is it false? The margin of safety is the difference between actual output and break-even output. T for true, F for false. Answer in the chat window. Good stuff. Lots of answers coming through and some explanation as well. Thanks, Ben. Yeah, it's true. Margin of safety is indeed the difference between actual output and break-even output. Well done. You got that right. Number 3, cost plus pricing. We had reference to that earlier in the chat window. Cost plus pricing involves adding a markup on unit cost. Cost plus pricing involves adding a markup on unit cost. Is it true or is it false? Thank you for all of the answers. Some are typed in capitals for extra emphasis. T for true, F for false, or the whole word if you prefer. Does cost plus pricing involve adding a markup on unit cost? Well, the name kind of gives it away, doesn't it? This is true, of course. Cost plus pricing does involve adding a markup on unit cost. 2 more. Here's the penultimate one. The payback period takes into account the time value of money. The payback period, we did an investment appraisal question earlier. Does the payback period take into account the time value of money? Is it true or is it false? Millie, I'm concerned you might be shouting at me here with all the capital letters, but I appreciate the responses. Lots of answers coming through. Well done, all those who are taking part. Yeah, we recognize this is false. Payback doesn't take into account the time value of money, nor does average rate of return. It's only net present value that takes into account the time value of money. Last one for you. Canada is in the NAFTA or NAFTA trading bloc. Canada is in the NAFTA trading bloc. Is that true or is it false? True or false? Canada is in the NAFTA trading bloc. T for true and F for false. Do we know what NAFTA stands for? Thank you for all the responses. And of course, it's true. Why is it true? Well, the NAFTA trading bloc is the North American Free Trade Association. North American Free Trade Association. And if we know a little bit of geography, we know that Canada is in North America. So Canada is indeed in the NAFTA trading bloc. And that brings us nicely to the end of the evening session.
Superb stuff, wasn't it? What about the quality of those responses in the connection spinner? I mean, we put a few of them on the screen, but we could have picked another 10, couldn't we?
Really,
Fantastic.
really good. And actually nice to see, you know, people thinking things through, taking a bit of time and considering their response. And some of the answers were brilliant, really good.
Yeah, some excellent chains of reason. Really
you missed out on a piece of exam technique advice, Pete and Mike. I don't know whether it's worth me just pointing out that if you get a question in the exam based around a florist, it's really important to read the stem of the question very carefully. Not to be sniffed at, that advice. Anyway, not often that Mike and Pete are left wordless, speechless, but today we've seen it for the first time. That was great stuff. And the other thing I just picked up on there, it looks like ARR could be an area for some extra revision. That was the one area, I think, where our live audience, who are typically absolutely on top of the whole task throughout that session, that was just the one topic, wasn't it? The one calculation that just looked like it was a little bit uncertain. Did you pick that up, Pete, Mike?
Yeah, there was a lot to do there in that 60 seconds as well. So they had a really good go, so that was really pleasing to see. But it's just remembering to differentiate it between that and the payback, which is what Mike alluded to as well in his last question. And is that true or false? Sorry.
Indeed. And love it, Ben. That's what we love. A nice pun in the live chat. Can't beat it. Fantastic stuff. Well, look, there we go. We're back again this time next week. It's a regular slot, 4:30 on a Tuesday for some Edexcel A-Level Business. Wednesdays for AQA, and then GCSE, spread the word, is 4:30 on a Thursday. We mentioned at the start that in 2 weeks' time, in fact, I think it's 2 weeks tomorrow, we are in London for our first Edexcel A-Level Business Grade Booster Workshop. Following week, we're in Bristol and Birmingham before the Easter holidays. So if you get a chance to come and say hello, that'll be fantastic. Really looking forward to those sessions. And after Easter, we're over in London again, and then Manchester and Leeds. So if you get a chance to come along, spread the word, maybe tell your mates or tell your teachers. That would be fantastic. If not, we will hopefully see you this time next week. And once again, many thanks for joining us live. As always, big thanks to Pete and Mike for putting the session together and delivering it with such expertise and aplomb. And I think we're done, aren't we?
We are. Thank you, Chip.
We are.
Thanks, Pete. And thank you, everyone.
Yeah. Well done, everyone. We'll see you next week.
Bye now.
Bye.
Bye-bye.